Gold remains stuck in a tight range with recent US CPI data and tariff headlines failing to spark a meaningful trend. So what could shake things up in the short term, and what might truly shift the tide for gold going forward? Find out in this week's edition of XAUUSD Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on XAUUSD Gold. Actually, gold's been going absolutely nowhere lately, trading in a tight range for yet just another week. We saw a bit of movement after the CPI report, but it didn't really shift the broader picture. The data was just hot enough to keep the Fed cautious, but not hot enough to scare the market. At the same time, optimism around trade talks and the continued strength in US equities are making gold less attractive in the short term. Still, concerns about the Fed's independence and simmering geopolitical risks are giving gold enough support to prevent any major sell-off. And from the daily chart, gold has been stuck between $3,300 and $3,360 for what feels like forever. Even though the bears had a slight edge over the past couple of days, the price is still holding above the 50-day moving average. If that support breaks, we could be looking at a dip to $3,300 or even $3,250, which marked the lows back in May and June. While on the flip side, if bulls push the price up, $3,360 and $3,400 remain key resistance levels. I'm pretty much sure most of you feel the same way I do right now. Gold just doesn't seem like it's going anywhere fast. We've got bullish and bearish headlines coming in at the same time, and none of them are really moving the needle in a meaningful way. Everyone's waiting for that one surprise, that one real catalyst that'll finally kick off a directional trend, but it's proving hard to come by. Take last week's tariff drama, for example. The White House announced a new round of tariffs ranging from 25% to 50%, including a 50% tariff on copper. Then this week, they followed up with a 90% tariff on Indonesian imports, plus a list of purchase agreement. But when you put it all together, with delayed implementation dates and political undertones, it reads more like a typical apply pressure first, soften later negotiation tactic. The market knows this game. Still, it would be a mistake to completely ignore the uncertainty behind these moves. Keeping gold tucked away in your portfolio as a hedge still feels like somehow the smartest play. And inflation-wise, the latest CPI print showed a slight uptick, pretty much in line with expectations. Core CPI missed a bit on the month-on-month figure, coming in at 0.2% instead of 0.3%, but both headline and core inflation hit January or February highs. The 3-month annualized numbers also ticked up to 2.4%. Hinting that tariffs are beginning to trickle through. It pretty much shuts the door on a July rate cut, but markets do fully expect 2 cuts before the end of the year. And because this didn't really change the rate outlook, gold only saw brief pressure before stabilizing. And of course, the Euro themes are still playing their parts, central banks are still buying, and the US fiscal situation remains a mess. Those have been gold supportive all year. But then we got a boost in US equities thanks to Nvidia getting the green light to export H20 chips to China, which pulled attention away from the safe havens again. So basically, we've got a perfect equilibrium of forces on both sides, and until something breaks that balance, gold probably stays range-bound. That said, after months of consolidation since mid of April, everyone's asking the same question. When will gold finally break out, please? Trust me, as someone who's been writing video titles every week for 3 months in this kind of sideways market, I know the struggle. I want the breakout as badly as you do. If there's anything that could really move the dial, it might be the growing chatter around Fed Chair Powell potentially stepping down. There's talk that the White House has already started exploring replacement options. Compared to Powell, who's resisted Trump's pressure to cut rates, the rumored successors like Hassad, Besant, Walsh, or Waller all lean more dovish. That could spark hopes of faster rate cuts and worries about the Fed's independence, both of which could give gold a lift. But unless we get a solid timeline, markets probably won't react too strongly just yet. Meanwhile, geopolitical tensions remain a wild card. The Russia-Ukraine conflict continues, and the US seems to be getting more involved. At the same time, ceasefire negotiations in Gaza aren't going anywhere. If either of these fronts suddenly escalate, gold could catch a bit thanks to its role as a non-sovereign crisis hedge. So big picture, gold's been stuck in a holding pattern. The tariff announcements and CPI data made waves but didn't spark a trend. In contrast, if we see a shakeup at the Fed or a major geopolitical flare-up, that could finally give gold a direction. While in the days ahead, all eyes will be on US trade talks, as always, especially reactions from the European Union and Japan. If they show signs of softening, safe haven demand could ease, weighing on gold. And don't forget the US retail sales report on July 17. Forecasts have been flipped from negative to positive. If core spending holds up and shows tariffs haven't hit consumption yet, that could push back expectations for rate cuts and make it harder for gold to rally. So that's pretty much all for this week. If this video is helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming data and events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!